Well, Lowe's beat Wall Street expectations in the fourth quarter, with sales surging more than 10% year over year, but shares are falling after the company issued a weaker than expected outlook. Joining us now for some analysis is Stephen Zaccone, Senior Retail Equity Research Analyst at Citi. Stephen, thanks very much for joining us.
Yeah, thanks for having me on.
Kind of deja vu all over again compared to Home Depot. Decent numbers, but it's that outlook that has people worried.
Yeah, deja vu. It's a fair way to think about it. I think when you look at 2026, right, it's very much a year of gradual improvement in the home improvement backdrop, right? The next few years should be better than the last couple of years. You've got consumer uncertainty. You've got a frozen housing market here in the United States. All of those are kind of overhangs. You know, we'd love to see some better growth for the category overall, but we're still in this sort of environment where, you know, we're slight growth is kind of the new normal for home improvement, right? Rates coming down would be a definite tailwind, but until that really happens or you see housing turnover pick up, you know, slight growth is probably the new normal for home improvement.
Did the pandemic skew expectations? Has that been a factor, or are we past that and these are different factors for it?
I think we're getting to the later stages of that, right? Like the give back from the pandemic. It's a great question. I think that was really the factor 22, 23, 24, 25. You really saw engagement come back to the home for the existing homeowner. I think the problem you have now is just you've got so many homeowners who are kind of locked in at a certain rate. They're not moving. Existing home sales is really that key metric that we're looking for to drive an increase in large project activity. So think about, you know, flooring, kitchen and bath remodels, right? Some of those big ticket things. You'd love to see that pick up. I think that's really what's the issue right now. The second thing I'd kind of brought up, there was tariffs discussed previously, is I think there is some sticker shock with the U.S. consumer when you think about doing a project, right? Like we have higher cost of building materials, right? Like there's been inflation, tariffs, but just generally speaking, there's been inflation across the economy. I think the second thing, you know, is labor availability, right? It has been a little bit challenged in the United States, and you're seeing some aspects of that in project costs.
And is there a moment, like, are we hitting a pent up demand where people are going to have to start doing these things, or is this something they could keep putting off if the economy doesn't change?
Yeah, I think we've heard about it for some time. So there's a little fatigue to say there's pent up demand. There should be, right? You do get to a point where if you get mortgage rates to get below 5.5%, to get below 5%, you know, those people who are kind of at that level in their existing home or maybe at their 4%, you're willing to only trade up for a little bit to go purchase a new house. So you do feel like you do see the pent up demand out there from turnover. I think when you look at people who are in an existing home, they did do a lot of projects, right? So you probably need the turnover piece to really see that pent up demand come. Lowe's gave a great data point today too. You know, we're still underhomed in the U.S., right? Some of the industry data points to 16 million, you know, housing units need to be built within the next couple of years. So there are tailwinds out there to be positive home improvement on a multi-year or longer term basis. It's just that shape of the recovery has been the most difficult thing to predict the last couple of years.
And now they've been starting to push for the professional contractors. Is that working? And could that be a big benefit if the housing build starts up and starts going gangbusters again?
Yeah, I think it's a great question. And I think it's an aspect of both Depot and Lowe's that's changed the last couple of years. You've seen them do acquisitions to get bigger into this large pro or building material space. And it's really a land grab to go after the dollars. You're in an environment where the housing market's a little bit weaker. So let's go out and buy some assets so we have more capabilities. So on the other side of this, we come out much stronger. I think that's the right strategy long term. You know, the concern for a Lowe's and a Depot is those businesses are a little bit more cyclical and they do carry a little bit lower margins. And I think that's, to bring it back to Lowe's today, you saw that with the initial outlook for 26. You did see some lower margin outlook and earnings below the street. They'll have an analyst day later this year in December. We'll hear a little bit more about the longer term opportunity for Lowe's. Our argument and our house view at Citi, we preferred Home Depot just because they've done a better job kind of integrating the asset, and there's not as much of this kind of margin concerns going forward. So we'll see what Lowe's says later in the year.
And so would you say Home Depot had the better report then?
I mean, we're partial with the buy rating, so I would say so. You know, I think it's important to keep in mind Home Depot had an analyst day in December. They did the heavy lifting in terms of like setting 2026 expectations at that time. So I feel like they set the floor. But if you're looking at the 2 days today, it seems like Depot had the better day.
Okay, and with Lowe's, anything else in the pipes coming down the pipe? They're looking at the professional contractors. They have anything else they're trying to do to build business?
Yeah, I mean, this year, home improvement's always dictated by the weather. I'm home for the third day in a row here because we still have more snow in the New York area. So think about, weather impact. We'd love to see spring, a stronger spring this year than we've had the last couple of years. We haven't really seen sort of storm impact. So the fact that we've had a good amount of winter storms, maybe you get some roofing repairs as spring happens, and then you see into the back half of the year, we didn't really have hurricanes in 25. So if you have more, hurricane damage in 2026, that always tends to help the home improvement business. But I'd say that would be the other kind of wild card to think about is like, what's the weather do for demand?
Okay, Steve, we'll wrap it up there, and you can keep the snow. We have enough up here. Thank you.
Yeah, thanks very much.
All right, cheers. Steven Zaccone is Senior Retail Equity Research Analyst at Citi.